Alright, welcome back to Average Money Works. Thank y'all for tuning in. If you're unfamiliar with the channel, I'm using this channel to document my own progress towards my own financial goals. Using a small account, I'm on Robinhood. If you have not started investing yet, make sure you click the link down below, get a free stock. Before we begin, none of this is financial advice, none of this is a recommendation. Like I said, this is just me documenting my own progress. So, the topic of today's video is how much money should you be investing in the stock market? So, everybody's number is going to be different. But we're going to be able to figure out just exactly how much you should be investing and how to get there. So make sure you guys like the video, subscribe to the channel, and let's go ahead and get right into it. So if you're unfamiliar with my podcast, make sure you guys go click that link down below as well. That way you can listen to these discussions and go follow my Instagram page because we post every single day a new investing or money saving tip. So I'm going to go ahead and pull up my Instagram page right here. And today's topic is going to be a breakdown of this quote by David Chilton from the Wealthy Barber book. What he says is, wealth beyond your wildest dreams is possible if you follow the golden rule. Invest 10% of all you make for long-term growth. If you follow that one simple guideline, someday you'll be a very rich man. So basically what he's saying is take 10% of everything that you make and invest that, and through compound interest and continuously adding money to your account, that's how you become rich. That's how you become wealthy. And this is my breakdown of how that works. So what you want to do is take your salary. So figure out how much you make every year. Then you multiply that by 0.10, or you can just take off that very last zero. And that's how much money you should be trying to invest every single year. If you want to break that down so that you can do a little bit more, you can be a little bit better at budgeting your money, you can take that. So let's say you make $25,000 a year. It's on here already, but let's say you take $25,000, you multiply that by 0.10, that's 10% of your salary, so $2,500 every year you should be investing in the stock market. So if you want to break that down to how much money you should be investing each month, divide that by 12, and you got 208. I rounded it to 209, so about $209 every month. If you want to break that down to each paycheck, if you get paid twice a week, divide that by 2. You want to invest at least $105 every single paycheck. So if you want to make it and you want to reach this level of success, treat this like a bill, just like you do your rent, just like you do your phone bill, just like you do your cable bill. You're not gonna make it till next month if you don't make those payments. So if you treat this just like that and you make this monthly payment before you even figure out how much money you have left over, you just automatically taking that $105 and investing that in the stock market, then you've achieved this golden rule, which sounds pretty simple, $100 a month. If you can't do that, then you need to do what I have in my previous post, is one, writing down all your expenses. So figuring out how much money is actually going out per paycheck, figuring out how much money you have left over. And then after you do that, you can cut down on some expenses. So if you find yourself going out to eat, more often than you actually eat at home, then it's time to look at how much money you're spending and when you can cut back and do some grocery shopping. On top of that, getting Starbucks all the time. Or if you're just really lazy and you don't want to go out and get food, you decide to just Grubhub or get some DoorDash delivered to your house. All of those things add up on top of not eating healthy. So those things, unnecessary purchases when you go out to the store, when you go to Target and you come back overspending $100 and you're like, how did I do that? And then you find out you got all these things that you don't even need. Or stop trying to get the latest and greatest gadget. You don't need the newest iPhone. The iPhone that you have works perfectly fine. And take that money and use that $100 to invest in the stock market. And if you're making more than $25,000 a year, you just do that. You just do that simple math to calculate how much you need to save each month or each year to reach that 10% guideline. And that's basically like level 1. So if you're saving 10%, you reach level 1 and you're good to go. But as you continue to increase your income, you want to be able to invest that extra income. So just because you're making more money next year than you were this year doesn't mean you can start buying more things, or you can go buy a new car or splurge and reward yourself the way that we're used to rewarding ourselves, which is through material things. And take that money and invest it in the stock market and reward yourself with a better retirement fund, a better portfolio. Money's going to grow. And I also wanted to show you guys this calculator here. Let's just say, let's say you put $1,000 in today, you get your refund check, or you still have your stimulus check right there. The average annual rate of return in the stock market is about 7%. So go ahead and put 7 there. It's going to accumulate over 12 months. We'll see how much we make in a month, and then compounding. And then let's say you put in $105 every single month, right? So every month you're putting that 10% threshold. You do the calculations, you're going to have $2,377.52 at the end of 1 year, right? Now what you can do is, let's say next year you make a little bit more money and you decide to put in $125. And now this is going to become your initial deposit right there. Same thing. This is the very low end too. 7% is the very low end. So you have more money in the bank. You're still getting that 7% return. Over the course of a year, it's compounding every single day, and you're putting in $125. So you added $20 a month to your payments, to your deposits into the stock market, and now you're at $4,103. You know what I'm saying? And you just do that over. Let's say this is your new monthly, this is your new starting point for the following year. Everything stays the same, but now you decide to go up to 150 because you got a raise or you cut back expenses. You're now saving more than 10% of your income and investing it, and now you're able to grow this even more, and now you're looking at $6,265 in just 3 years, and that's the very low end of 7%. If I was to do this, let's go back and let's just say this is our regular savings, right? In your regular savings account, this is actually the best savings accounts and rates of January 2021. And you look at all these are all less than 1%. So the stock market is 7 to 10%. This is less than 1%, and this is the best savings account rates. So it's not going to get any better than this. You know what I'm saying? And if we keep going back, I think I looked it up. This is the average. This is the average annual rate of return in your regular personal savings account. So you have your checking account, you have your savings account. You keep depositing money into your savings account and using that as your savings. Let's put that 0.6. So let's start everything over. 0.06. You're still putting that $105 in there every single month. And let's see what happens. You're at $22.60 and 98. So let's redo this. $2,260.98 with a 0.06% APY. If we change this to 7, you're making almost $120 something more. So at 7%, let's pull up this calculator. So we added $1,200. This is how much money we added to it. So out of this $2,377, $2,260 is of our own money, right? So if we do this math, 2260, we got $117.52 of interest. That's what we were paid investing in the stock market, right? So remember that $117. Let me write this down over here. So investing in the stock market, you're making $117. What was it? And 52 cents. Okay? If this is our regular savings account. Oh wait, let's go here. Our regular savings account of 0.06. Everything else stays the same. We put in $1,000 initially. We add $105 every single month. Over the course of 1 year, we're looking at $22.60 and 98 cents. So everything else stays the same, right? We put in $105 every 12 months, and then our other $1,000 that we started with. Look at that. We only made 98 cents in our regular savings account in a year. 98 cents. Okay, let's do our little high yield. So if we put it in one of those high yield savings that we looked at earlier, that I showed you, look, the best rate's 0.6, right? This is still under 1, but it's better than 0.06. Now we're looking at 0.6. Everything else stays the same, our initial deposit, our monthly deposits, and now we're looking at $9.79 of gain. So let me go over here and just put this, let me just put this on paper so you can see it. So we got $9. What the hell? What happened here? All right. What? All right, I don't know what's going on, but $9, what was it? And 79 cents. Jesus Christ. All right, look at this. So you're making 98 cents by keeping all that money in your regular savings. You're making $9.79 by keeping that in a high yield savings account. If you put it in the stock market, you're at $117.52. And that's the low end. 7% is low end. If I just show you guys real quick, let's say you take your money and you continue to put it into the SPY because that's just the basic standard of the stocks. This has 500 of the best companies. Let's look at this year. It went up 19% over the course of a year. So let's put that 19% in here and see what happens if we grow our thing up 19%. So let's change this to 19. And everything else stays the same. Our initial deposit, $105 a month for a year, and we're at $25.96. So if I take that number, 2596.44 minus our investment right here, $336.44 we would have made if we invested in the stock market a year ago and followed these guidelines right here. That's crazy. What is this? I should be remembering this. 44 cents. So if you want to know why we're preaching investing in the stock market, is because of these numbers right here. That's $336 that you wouldn't make if you left it in here, right? Let's just say that you didn't invest in the stock market and you're just saving it. 336.44 minus a measly 98 cents. That's $335 that you're missing out on. If you wanted to put it in a high yield savings account that these banks try to push onto you, you got $326 that you're missing out on. So investing in the stock market, definitely consider it. If you want any more tips on investing in the stock market, please leave a comment down below. If you want to get a visual on everything that we went over today, make sure you guys go follow my Instagram at AverageMoneyWorks. We have daily posts. This breaks down your annual salary like we did in the beginning, how much money you should be saving each year, each month, each paycheck, and other tips on how to increase your income, decrease your spending, increase your investing, and increase your wealth. So with that being said, stay tuned for the next one. I'll catch y'all then. All right, peace.